Welcome, latest Motley Fool scoreboard. I'm on in Chocobaloo, and we've got longtime fools Jim Gillies and Dan Kaplinger giving a 1 to 10 rating to a company that's been a stealth 10-bagger since 2012. It's Moody's, ticker symbol MCO. Rate the strength of the business first, including factors like industry and competition. 10 is invincible, a 1 is hopeless. Jim's at a 9. Dan, you're at an 8.
Yeah, Moody's best known for its credit ratings on bonds for companies, private companies, and for sovereign government entities. You'll also find research, investment research, and data. It's really one of 3 well-known bond rating agencies. You've got S&P Global, you've got Fitch Ratings, and despite concerns that regulation was going to come up after the 2008 financial crisis, and that would lead to a shrinking of the bond market somehow. Well, guess what? People still like to raise debt, and Moody's has seen its stock climb 13-fold just since 2012.
Yeah, I don't have a lot to add to what Dan said, although I'm going to, and very foolishly, try to top it. I do have it at a 9. I thought about having it at a 10, the invincible status, which I've never done before. And the reason is because this is an absolutely, Dan has already alluded to, this is an oligopoly with S&P and with Fitch. You had the big 3, including Moody's, blamed and demonized for fueling the 2008 financial crisis. You had loud screeching from all quarters, wanting to break the rating agencies up, break their hold on the industry, and we did precisely nothing. Except for Moody's being not just a 13-bagger since 2012, it is a 32-bagger from its credit crisis nadir in 2009. That is a strong business. But I'll stick with my 9.
Yeah, when you come close to nuking the entire world's economic system and you're still around 15, 20 years later, all right, that's a moat. Don't come talking to me about Apple's moat or whoever's moat. That's a moat. Let's talk about management. A 10 is Warren Buffett. A 1 is Homer Simpson. Both of you have 8s, Dan.
Rob Fauber's been in the corner office as CEO since 2021. He's a longtime Moody's employee, though. He's been there for about 20 years. He's done a good job of execution. Can't really argue with the results that he's had.
Yeah, I have about the same opinion. This is a good professional caretaker management. There's no real insider stakes here, like they don't really own a lot of shares. That's not unsurprising for a company founded in 1900. Yeah, what Dan said.
Financials, a 10 is a fortress, a 1 is yikes. Jim with a 9. Dan, you've got a 7.
Yeah, I dinged it a little bit. I've seen that it looks like the financials are somewhat prone to a level of cyclicality. When debt is in style, its results are going to be good. When debt financing becomes less popular, then there's some potential for a slowdown in growth. But long term, the gains have been there, and margins have trended up overall. I think it's got a strong financial position.
Yeah, I mean, cyclicality here doesn't really faze me. They're too entrenched in their position. And Dan, when has debt not been in style? Let's be honest. It's always worked out for these guys pretty well, regardless of whether companies are raising capital hand over fist or when they're being a little lighter. And of course, they're in the securitization market, which, I suppose is what got them in the credit crisis problem. It's beautifully asset light, a high margin business, making copious amounts of cash, and they're investing it in the service of shareholders, hence my 9 rating.
Jim, we've talked about Moody's tremendous returns in recent years. Let's talk about the next 5 years. What will it return, and how safe is it? Keeping in mind a 10 is a sure thing, a 1 is a lottery ticket.
Yeah, my 5-year returns, I've got it in the 5 to 10 range, though with a safety score of 9, because, if they survive the credit crisis, they're probably going to survive pretty much anything in a more normal market. Businesses of this quality and resilience arguably deserve a premium multiple. But at 28 times EBITDA and 44 times earnings, Moody's is certainly accommodating that statement. They've grown at about 13% annually over the past 5 years, 16.5% over the past 10 years. That's before dividends. The valuation is higher today than it's been 10 years ago, but that's been gradually trending up over the past 5 years. And that's kind of why I'm going to the 5 to 10 range. Because a lot of the growth has already been brought in. But I'm silently wondering if 10 to 15 might have been the proper score here.
Oh, I think you did great with 5 to 10%. That's what I put. I dinged them a little bit. Safety score of 6. Those earnings multiples above 40, they just kind of look pricey in the current market environment. But the oligopoly status seems purely intact at this point. I just gave them a ding on safety just because we saw the stock price fall pretty sharply in 2022, and that signals to me that it's no longer the super conservative defensive stock that I think at one point in time it might have been.
Well, thank you to both Dan and to Jim. They've given Moody's a solid overall score of 7.4 out of 10 with excellent fundamentals. I'll be interested if there's another dip. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is BWX Technologies. Till then, Fool on.
Yeah, you guys are all blurry, but I'll just assume Mike knows what he's doing.
Blurry's fine.
Speaking of Mad Eye Moody's, that's our first one.